We're at Dealer Week in Tampa for MRAA. I'm Alan Wendt. Russell Baqir is with us right now in Northpoint Commercial Finance.
Yes, sir.
What can you tell the dealers? I mean, 2024 is coming up. We're trying to recalibrate to get them through what could be a difficult year, or what is in some cases already a difficult year, because boating industry is leading in that particular trend of they're feeling the effects of high interest in the economy and the indecision. What tools are you able to bring to a dealer now to help them get through next year?
Well, there are several tools that we work with, not only with our manufacturer partners, but for the dealers to have access to get a forecast of what curtailments would look like. When we buy an invoice, basically they can see when a curtailment's going to kick in, which is typically at 9 months. Over the last decade, nobody's really paid attention to those tools. You know, we just had the benefit of inventory turn better than 2 times, which history tells you a 2-time turn in this space is good. It's just that right now it's normal. It's not good. You're right. It's normal, but we're finding our ways getting below that 2-time turn. So people are having to figure out better ways to manage their cash flow, figure out better ways to forecast what expenses are coming to them. And our system technology does allow that they can look ahead. They can see what it could be. Or if I sell this boat, then maybe I don't have to feel that and just stay ahead of it. Because with a 9-month before your first curtailment, that's, you know, worse than a 2-time turn at that point.
Yeah.
So.
You also get into some areas that are still new to the industry, boat clubs. I mean, even though the boat club is proven itself as a wonderful business model in many ways, that's an area that not a lot of people play in on finance. How does that work? You
know, what was interesting is we've been doing floor plan, me and a group of folks that have been involved with Northpoint, but we've been involved with floor plan for, you know, well, I told you earlier, since 1988. We really started looking at the boat club model probably in the mid 2005, 2006. And it was at a different finance company at the time, and we were looking at it from, you know, is this a better way, cash flow, but we never could get comfortable with the model. Fast forward to Northpoint, where we got into this space, and we were competing with other lenders and wanting to grow our portfolio. We found that the boat club actually was a great way to help our manufacturer partners. It gives them another avenue, because every year these clubs are renewing their fleet, they're updating their inventory. Not all of it, they have it on a cycle. And typically the way we do it, there's some type of down payment, depending on what the boat is, but there's some level of down payment up front, and then there's a monthly scheduled cost. It would be like a curtailment, basically, if it was like a floor plan side. And we carry it out with them for, 3 years. And then typically the payoff is anywhere between 20 to 30%. But by that time, even if they go to auction the boat still usually comes in around 55%. And we're on title as the lender. So what we've actually found is it's probably what the model looks like is it's more secured and much more steady cash flow than what we see in the normal dealer model.
Now, Russell, looking ahead to this year, is it possible that dealers might make a larger portion of their income with a brokerage model? Because we've had this huge upturn during COVID of people buying boats. Now some of them are going to go, okay, I tried it, time for me to get out, or being forced out based on the economy. Will that result in an upsurge in brokerage business?
It could, but what consumers also have finding, the ones that are thinking about getting out, is when we had we're raced to get outside, right? Basically, that's what we experienced, which was really a great time in our history, just not the COVID part, but the getting outside and spending time with your family. Exactly, and spending time with your family. What we kind of saw, though, was the opportunity for dealers to get higher margins. MSRP, some cases they got MSRP a little bit higher than that. Well, you get people in loans that are structured like that. It's not easy for you to find your way out of it whenever the market changes and shifts like it has. So we're not quite seeing the consumer inventory hitting the market quite like we thought we would. And I'm not saying that that's the reason. It is moving. It is an uptick. There are people that are getting back into the soccer mom window, or, time is precious, so I can't boat as much. I don't want to let it sit. So they're starting to try to find a way to sell it. So brokerage is definitely going to be an avenue. I believe that will be a way. But there's also used financing. You don't have to broker it or consign it. You can use our used program, buy the inventory. You can run it right through our system. We're linked right with NADA, so you can see the immediate valuation, exactly what the boat would book out for, while you're talking to the customer, so you know exactly what you could put into it and how much the loan would be. And then we give them plenty of time to turn that, and historically used inventory does turn faster than new inventory. The depreciation's already kind of out of that factor in the inventory.
And because you're linked with their floor plan and maybe the financing, does that shorten the interest rate for a day or two? I mean, that can make a significant difference to your P&L.
Oh, absolutely. On a trade-in, you can basically clear that inventory off the books within a day. Because we link right into your bank. If you pay online at ACH, it's applied to your inventory. The trade is also applied at the same time. You can just clear that right off of your credit line. Absolutely.
So what do you see in the year ahead here now? Is there an opportunity for a soft landing, as some economists believe we'll reach, or do we still have some unknowns?
Marine had the benefit, and I guess probably the engine manufacturers contributed to this, but at the time it didn't feel like a benefit. But the inability to get boats out the door, kind of like the RV space got inventory out the door and was able to get ahead of the demand, which was excessive demand, but they weren't able to slow it back down. And so RV has had a much longer time in the downward cycle than Marine really started with this selling season. So we probably saw our first issues or problems really showing up last May. But I think our first repo is early July, and so we've been slowly seeing the dealers that are saying I can't make it at this point, so I'm going to have to voluntarily surrender the inventory. We have been seeing that as an uptick, but it's so far the runway for us is much shorter of time that we're going to go through this than what we've seen in other industries. So the benefit for a shorter or a softer landing, I guess, will coincide with when the Fed decides that, hey, we've slowed this market down enough. If you look at investing in bonds right now, you get a better return if you invest in short-term bonds versus long-term bonds. So that's basically even the bond market's telling the Fed, you guys gone too far for too long. You need to make a move here, and we should see, I'm hoping by the end of first quarter or sometime in second quarter, the response from the Federal Reserve and starting to bring rates back in line with a market where they start getting it to move again. But make no mistake, at least from the economists that I've listened to or read, this is a problem driven by Washington. It's not really driven by the businesses.
So we have a good chance of getting through the year if you can hang on.
Yes, absolutely. And then next model year, our belief and our perception is next model year you'll start seeing some real benefit where the consumer's coming back.
All right, Russell, thanks again. Great insight today.
Thank you, sir.
Appreciate it.
Appreciate it, Alan.
Make sure to check out our YouTube channel for the full Dealer Week experience.